Hey everyone, welcome back to the channel. I'm Endy. I'm an enrolled agent and a QuickBooks certified pro advisor at Infinity Tax, where we help business owners save money on taxes and build long-term wealth. In today's video, I'm going to help you do exactly that by walking you through the basics of QuickBooks for small businesses. Now, most business owners have heard of QuickBooks, and it's known for the most commonly used software out there for bookkeeping. But before we jump straight into it, I want to also cover the basics of bookkeeping so you can better understand QuickBooks and how to use it properly. So today, we're going to cover what bookkeeping is and why it matters and how it works, and then we walk through the basics of QuickBooks, including how you set up a chart of accounts, connect your bank account, categorize transaction, reconcile accounts, and then run your financial reports. So if that sounds helpful, go ahead and like this video and make sure you subscribe to the channel, and let's get started. So first, what is bookkeeping? Bookkeeping is a process of tracking your financial activity inside your business. That's really what it comes down to. It includes tracking things like sales, invoices, expenses, bills, inventory, loans, payroll, and more. As a business owner, you need to keep track of your financial transactions so you can properly manage your money and create a clear business budget. A business budget gives you a clear financial roadmap so you're not surprised by how much money coming in or how much money coming out each month. Bookkeeping is also very important when it comes to preparing your taxes. Most business owners require to file a tax return every year, and the only way to make sure your tax is being accurately done is to have an organized book. And lastly, bookkeeping helps you make better business decisions. You'll be able to ask questions like, can I afford this? What will be the financial impact of this decision? Will this add value to my business? These are the type of questions that every business owner should be asking, and those answers are usually found in your bookkeeping. Now that you understand what bookkeeping is and why it matters, let's talk about how it works. Bookkeeping works like a cycle. It starts with a business transaction, whether you receive money coming in or money going out. Every financial transaction affects your books. After the transaction happened, there should be some type of source document. This could be a receipt, invoice, bill, bank statement, loan documents, you name it. These documents are usually used to record transactions inside of QuickBooks, but if you're like many other business owners, it can be hard to keep track of every single receipt. And that's why your monthly bank statement can be very useful, because it gives you a record of activity that happened inside your bank account. And the next part of the bookkeeping cycle is classify your transactions into one of the 5 main categories: revenue, expenses, assets, liabilities, and equity. Revenue is money your business earns, like sales, right? Expense or costs your business pays, like advertisement, rent, or payroll. And then asset are things like your business own, like inventory, cash, or equipment. And then for liability, it's the amount your business owes, like loan, credit card, and unpaid bills. Equity represents the owner's investment in the business, such as contribution made into the company. This step is extremely important because it shows you how classified transactions determine how your financial statements look and how you understand your business performance. So, in simple terms, the bookkeeping cycle starts with a transaction and then a source document, and then the transaction gets classified into the right category. Now that you have a basic understanding of bookkeeping, now let's move into QuickBooks, and hopefully you have a QuickBooks subscription or you're planning on getting one. QuickBooks offers different subscription levels, and each of them comes with a different feature. QuickBooks may say that the Plus version is the most popular one, but many small businesses that I've worked with usually just start with the essentials. Once you have your QuickBooks subscription, the next step is to set up your chart of accounts. Your chart of account is the full list of account or categories your business uses to organize transactions. So think of it as a foundation for your bookkeeping system. Every transaction you enter into QuickBooks will be assigned to one of these accounts. Here's what a completed chart of account looks like. Each account has a name, a type, a detail type, and the balance. These details are entered when you create or edit an account. For example, let's say you want to create an account for office rent so you can track the lease payment. From the chart of account screen, you would click the green new button, and then you would select the account type. And since office rent is an expense, you would choose expenses. Once you choose the expenses, QuickBooks will show you the different detail type. You would select one of the best description that you can actually create for it. In this case, office rent would likely fall under rent or lease of building. QuickBooks also give you a short description that will help you choose the right detail type as well. Once you choose the expense type, QuickBooks will show you the different detail type, and you will select one of the best description that you can find for that one. In this case, office rent will likely fall under rent or lease of building, and QuickBooks will also give you a short description to help you choose the right one as well. After that, you will name the account office rent. This is the name that will appear on your chart of account and on your financial report. Then you will click Save and Close. And once you return to the chart of account screen, you will see the new account listed. There are a few very important things to keep in mind here. First, it's very important to choose the correct account type. Assets should be listed under asset. Revenue should be listed under revenue. Expense should be listed under expenses. And if you accidentally set up an expense as an asset, that will show up on the wrong financial statement, and your company financial will be incorrect. Second, you may want to create subcategories for a certain account. For example, instead of having one general advertising account, you may want to separate it, like Facebook ads, Google ads, print ads, insurance, or any other type of marketing costs. And to do this, you should follow the same steps. But before clicking Save and Close, you would check the box for a sub-account and choose the main account that it should fall under. Third, make sure you create accounts for transactions you expect to have in your business. You don't want to put too many transactions on the other or miscellaneous. That can make your reporting very confusing and cause you to miss tax deductions. QuickBooks will give you the basic of chart of account to start with, but it's important to categorize it to your specific industry. Once the chart of account is set up, the next step is to connect your business bank account. And if you do not already have a business bank account, please guys, go down to the bank and get one open as soon as possible. I highly recommend you opening one, and all your expenses and business revenue should run through that. And don't add your personal expense to that account. That is a no-no. And that will make your bookkeeping business much cleaner and much easier to manage. If your business is an LLC, S Corp, or a C Corporation, having a separate business bank account is especially important because it keeps your business finance separate from your personal finances. To connect your business bank account inside of QuickBooks, go to the banking screen and select Link Account. From there, choose your bank and log in using your online banking credentials. QuickBooks will walk you through the steps to connect your bank account. One of the final questions QuickBooks will ask is, what date do you want to import transaction from? A good rule of thumb is to start at the beginning of the tax year, usually January 1st. This allows QuickBooks to bring your business transaction from that date forward. Once the account is connected, you will see the bank account listed at the top of the banking screen with the imported transactions shown below. Now that your bank account is connected, the next step is to categorize the transaction. And remember the chart of account we set up earlier? This is where it becomes important for each transaction that you select the correct vendor or the customer name. And if the name is not already in QuickBooks, you can type it in or create a new vendor or customer. Then you will choose the correct category. The categories you see is based on your chart of account. So if the transaction was for office rent, then you would choose office rent. If the transaction was for sales, then you would choose sales, and then you would click add. You repeat this process for every transaction in the bank account. And if you're not sure where to put a transaction, you can temporarily put it under Ask My Account. And once you find out where that account belongs to or where it should go, then you can add it to a transaction. It becomes part of your books and it will show up on your company financial statement. Before you run your reports, you want to make sure your transactions are being recorded correctly. This is where reconciliation comes in. Reconciliation is the process of comparing your QuickBooks balance to your bank statement balance to make sure everything matches. You want to make sure your transactions are not missing, duplicated, or incorrectly recorded. Reconciling your account at least once per month can help you catch errors, duplicated transaction, missing transaction, or even billing mistakes from vendors. To reconcile in QuickBooks, you will start on the bank screen, then you will go to bank register. The register will show all transactions that have been added for that specific bank account. From there, click reconcile, and on the next screen, make sure your correct bank account is selected, and then enter the ending balance and the ending date from your monthly bank statement. This means you will need your bank statements in front of you before you begin the reconciliation process. Once you enter the ending balance and the ending date, click Start Reconciling, and on the next screen, you will check off the transaction in QuickBooks that also appears in your bank statement. This is a great time to catch bookkeeping mistakes and make sure your transactions are categorized correctly. The goal is to confirm that everything recorded in QuickBooks actually happened and appears in your bank statement. By the end of the reconciliation, your difference should be 0. If it's not 0, then it's likely an error. And it could be an incorrect beginning balance or incorrect ending balance, missing transaction, duplicate transaction, or probably something was checked by mistake. Any transactions that do not match your bank statement should be reviewed carefully. Missing transaction may need to be added, and transactions that should not be in QuickBooks may need to be removed to avoid misstating your numbers. Once the difference is 0, you can click Finish. After completing this process, you should feel confident that your books are accurate through the end date in your bank statement. And the final step in this QuickBooks training is running your financial report, specifically the balance sheet and the income statement, and also called the profit and loss statement. The balance sheet shows your business asset, liabilities, and equity. In simple terms, it shows what your business owes and what your business owns. The income statement, or the profit and loss statement, shows your income and expenses for a specific period of time. This report tells you whether your business made a profit or a loss. You should review these reports at least once a month. The good news is that most of the work is already done. Once the transactions are categorized and reconciled, now running your financial report is the next step. To run a balance sheet, go to the reports and menu and search for balance sheet. Select the report period or click custom. If you want to choose your own date range, then go ahead and click it. Then choose either cash or accrual as your accounting method. Many small businesses use the cash basis accounting, so you can pick whichever method that you're currently using. After selecting your setting, then you can click Run Report. The balance sheet will show your company's asset, liability, and equity as the date that you actually select. Now, if you look at the income statement from the report screen, search for profit and loss and select the period or choose custom date range. Then you will choose cash or accrual or click Run Report. This report will show your business income and expenses during that that time period, it will help you understand how profitable your business is. So congratulations, now you have a better understanding of what bookkeeping is and how you can set up your bookkeeping inside of QuickBooks. So to recap, bookkeeping is the process of tracking your business financial transactions. It helps you manage your money, prepare accurate tax return, and make better business decisions. So to set up your bookkeeping in QuickBooks, start with a separate business account, then customize a chart of account, connect your bank account to QuickBooks, and then categorize the transactions, reconcile your accounts, and then run your financial report every month. Simple, right? I'm kidding. Now, if this feels overwhelming, that is completely normal. A lot of business owners prefer to hire an experienced bookkeeper to help them set up everything in their books to make sure everything is accurate. I own a bookkeeping business, so if you need help, the link is in my bio for a free consultation. I hope you find this video helpful, and if you did, let me know in the comments. Give this video a like and a share, and also subscribe to the channel if you haven't. I'll be making more of these videos. Thank you.